Student loans are a big thing. Collectively, we owe more than $1 trillion. And it seems like that topic is becoming more prevalent lately. Good morning and welcome to Maryland Today. Joining me today to talk about a new student loan program at Guidewell Financial Solutions is Nina Heck. She's the Director of Counseling and Client Services for Guidewell Financial Solutions. Nina, always good to see you.
Thanks, Jeff, for having me.
Now, I do understand one of the reasons I wanted to have you back in here is that you just launched an exciting new student loan program at Guidewell Financial Solutions. So before we talk about it, though, can you explain a little bit why this is needed?
Well, for the obvious reason that there's over $1 trillion in student loan debt in America, which is quite large, much larger than any credit cards. And you have half of it. My daughter has the other half of it.
Okay, great.
So yes, between the two of you. Of the 43 million student loan borrowers, more than 7 million are already at 90 days delinquent.
Oh, wow.
And there's 5 million that are in default. And there's a lot more that are enrolled in negative amortized student loan products at this time. So consumers have been seeking help, through different organizations and finding that there's a lot of fees that they're paying for very little service and maybe getting a product, but it doesn't necessarily fit with their financial situation. So we just really felt this was our time to come into this to help the consumer with this particular need.
So there are other programs that are out there. So how does Guidewell Financial's student loan program differ from those that have been offered up until now?
So again, as I was saying before, many organizations will do this one and done. You call up, you have a problem with a student loan. They're quick to give, a price for their counseling piece that they're offering you or a product that they're offering you. But you're only walking away with a fix for one loan, and you don't know whether or not this is even going to work with your finances that, you're trying to manage. Mm-hmm. So our whole process, as you know, I always preach this on all of our talks, is that we do the holistic approach. So we're looking at the person's income and we're trying to see what exactly is going on and how these student loans fit with what they're trying to pay. So one of the great things is that the National Foundation for Credit Counseling became involved with a really comprehensive training program that allowed our counselors to become certified, which gives them the tools and the knowledge to be able to address the needs of the consumer when it comes to student loans.
You started to touch on this here a little bit about how this program works, but why don't we dive into that a little bit deeper? How does your new student loan counseling program work for you?
So we're going to look at it from the perspective of what the consumer's income is at this time. We're going to go through and put together a realistic budget, and then we're going to look at the student loans that the person has to see, first off, how many they have, where they're located, what state of delinquency, if they are delinquent, that they're in, and then pull that together to see what options work with that person's particular situation. So one of the things that we're always looking for is, are there ways that the person might be able to improve their income or make some budget reductions that hopefully helps them to stay on track with their student loans?
Now, most services that you offer at Guidewell Financial Solutions are free, but this one's a little bit different.
It is, Jeff. We have a $50 counseling fee for this. And believe me, for what goes into this process, it's quite comprehensive. This is just money that helps to cover some of the administrative costs for student loan counseling.
It's understandable. Mm-hmm. Yeah. Well, what advice do you have, Nina, for college grads who may be listening right now who owe on student loans? Let me just get my pen out so I can write this down.
Write this down now, Jeff. I want you to take note. It's really common that one of the things that they're facing is many student loans and trying to figure out who they need to address first and what do I do with the whole picture.
Yeah.
They tend to lean just towards whoever's contacting them. But what we're trying to do is have them go in and take a look at all the loans that they have, whether it's federal or private. And with federal student loans, they can go in through the NSLDS, which stands for the National Student Loan Data System. You can simply Google the letters NSLDS and it'll come up. And this is a database that will house all of their federal student loans from the service lender to what status it's in and what the balance is and when the money dispersed. They'll need their FSA ID in order to get into this, but this is where we direct them before we do the counseling.
Oh, that's great. That's really good information because I know, especially now as colleges are getting even more expensive, people are having to take out multiple loans to make those payments to the school. So it'd be great to be able to have access to everything and be able to see everything like that.
Yes, I agree.
So what if you have loans with private lenders?
So the private lenders are a little bit different. We rely on the credit reports to try to see, what the person might have. But even doing so, sometimes it's redundant. You might have duplication. So we try to have the borrower look back as far as their promissory notes, to find out who they originally signed with and what they had as options on those. And if you don't have those, you can contact that lender or servicer and you can request a copy. We've counseled people at this point where that's one of the issues they have. They can't put their hands on their original documents.
Okay. Well, when student loan borrowers, they check the balance that they owe, sometimes it looks a little bit higher than what they were expecting. I say that every time just because I don't want to look at it at all. How does this happen, though, to people?
So, Jeff, there's different loan products that the student ends up with, and there are federal loans that are subsidized. There are also unsubsidized federal loans. The subsidized loans would be the ones that the interest is not accruing while they're in school and during deferment periods.
Okay.
The unsubsidized, at the time the money's granted and released, starts accruing interest. And I recall very vividly with my daughter when she was in school, these loans will actually send information out trying to get you to pay the interest while you're in school. And when you ignore this, what happens is that loan that you took out when you started, when you finish school, is already higher because the interest is built up on the loan. In most cases, interest that's accruing on these unsubsidized loans during deferment and forbearance really make a difference in what the balance is.
Well, we're throwing a lot of terms out here right now, so I think this brings up an important point. There are a lot of, can we say jargon? A lot of jargon involved with student loans. Why is it important to really understand all this terminology?
Well, it helps because, for one thing, the terminology is what leads you to being able to figure out what you need to do with the products that you now have. So this is a very complicated matter. This is where our organization can really help a person that feels like they're just buried in an endless realm of information and not knowing where to reach out or what they need to do or understanding what the terms even mean.
Well, with that in mind, why don't we take a look at how student loans work in general? So say I graduated a few months ago, but I haven't been able to find a job yet. What options are open to me?
So with student loans, typically when you finish and you have that 6-month grace period and people are trying to find jobs or maybe they have a job, if they realize that it's not going to meet the student loan payments that they have to take on, because most of these loans go into an automatic 10-year repayment, there are options out there. And again, we talked earlier about the deferment, which is something that the student can request, and the forbearance, which is something that the servicer can allow you to have. But there are also other repayment plans that are available, such as the graduated repayment that allows them to start out with a lower payment, and it'll actually increase every 2 years for the course of the 10 years. So that's an option that they might look into. There's also the extended repayment, where it would be even lower than the 10-year and the graduated payment. So there's different options, but again, there's a lot of information out there, and this is probably what causes people the most stress, is trying to figure out what product's good for me.
Well, I think as we continue here, maybe it's an important point to stop for just a second and mention the contact information for Guidewell Financial Solutions. That way, if somebody listening right now has heard some interesting stuff and they want to get in touch with you, where should they go or who should they call?
Okay, so we actually have our student loan, 877-222-7435. It's a dedicated line just for our student loan counselors.
Okay.
Again, 877-222-7435. And, of course, our website, they can go through guidewellfs.org.
Wonderful. Well, all right, say I have graduated. I haven't quite found that job that I'm looking for yet, so I'm living on a limited income. Does it make sense to defer a payment as long as possible?
You probably don't want to do that, because obviously with deferring, what you're not doing is you're not really looking at what the real issue is that's causing this. So you can defer. There are times that you can put this off, but it's only temporary fixes. Sometimes it's 6 months, sometimes it's a year. Really what you need to do is you need to assess where you are financially, what type of income you have, what your budget looks like, and where you can make some definite changes in order to be able to deal with these.
I know there are a lot of other types of repayment as well that borrowers can tap into. There's one term that I heard when I was going through a lot of this process a few years ago. It's called income-based repayment. Exactly what does this mean?
Well, it's kind of what it says. So the income-based repayment's a term that they apply for the federal William D. Federal Direct Loan Programs and the Federal Family Education Loan Program, which everybody calls FFEL. Again, terminology. But they're all out there, and they're designed to help a person based on specific need. There's several different options that are available. There's the income contingent repayment, which is the ICR, the income-based repayment, the IBR, the pay-as-you-earn, the PAYE, and then in December of 2015, they just came out with the revised Pay As You Earn, which is a new program that goes a little lower, expected to maybe drive about 5 million borrowers with a much lower payment. And then, of course, there's an income-sensitive repayment plan. So there's a lot of different options out there, but that's really understanding what it takes to meet the qualifications for those particular scenarios is where the counseling can be so very beneficial.
So if I want to sort of dumb this down for myself, essentially, if you're making less money, you will be able to pay less on your loan. But as you start to make more money moving forward, you will be asked to pay more on that loan.
Well, you can be. Actually, we encourage the consumer to do that because what we found with many of these payment-reduced payments is that by lowering it, sometimes you're not even meeting the interest on the loan.
Right.
So your balances are actually going up. Another thing that can help you is that if you find that you're in a situation like that and you're in need of help, if you're trying to work on it yourself, you can request what's called an administrative forbearance, which gives you the time to fill out applications prior to getting that into the servicer to see if you qualify for those. So, yes, ideally, if you can stick with a 10-year repayment, I would always tell you that less is best. So, don't reach for something to lower your payment just because. If you can pay that and pay out in 10 years, you're done. Yeah, that's exactly right. More information that you will get if you contact Guidewell Financial Solutions to take part in this new student loan program that they have. GuidewellFS.org is the website if you want to find more contact information. Now, we've all heard of friends or family members who didn't have to repay their student loans. What does it take to have your loan forgiven? Well, there's different things here that we're addressing. So one being discharges and the other being forgiveness. So there are different qualifications. We counsel people that have been enrolled in schools that closed before they were able to continue. So there's a closed school discharge. There's obviously if a student passes away, there's a death discharge. There's total permanent disability discharges. So there's some options there that are available. And then, of course, forgiveness. We have the teacher loan forgiveness program where if you work for a school that meets the requirements of a Title I program, you can have 5 consecutive years and then you qualify for the teacher loan forgiveness. And you can actually Google teacher loan forgiveness and they have websites that shows what schools are available in what states and with the zip code and area codes that people use. And then, of course, there's public loan service forgiveness. This is a little bit different in that you're working for maybe a nonprofit organization, a 501c3, or a government or state or local or tribunal organization, and you need to have a total of 120 payments made while you're with them for the course of 10 years. Okay. And then you can apply for the public service loan forgiveness programs.
Well, Nina, why don't you tell me a little bit more about default?
So default occurs, Jeff, when you've reached 270 days and not made a payment. And we are counseling people that are calling us that, are concerned about going to court or their wages being garnished or possibly their taxes being taken. So it's a matter that needs to be addressed. You don't want to ignore it because it's not going away. Right.
So what should I do if I find that I can't afford to make the monthly payments on my student loan?
You want to reach out because this is the same thing that I tell all your listeners, whether it be credit or housing or any issue. By not addressing this, it's not going away. Obviously, these loans are great in the amount that's owed. So you want to reach out to an organization such as ours. You can give us a call. You can go to our website. We have information on our website where you can, again, go to guidewellfs.org and look at the different services that we have on there as far as e-learning courses and information about student loans and what a person needs to do.
And if somebody wants to call the student loan service directly, what's that number?
They can call us at 877-222-7435.
Well, wonderful day again. A lot of information we've just been handed. Again, GuidewellFS.org is a great place to go to find out more about these services and just to learn more in general. Nina Heck, Director of Counseling and Client Services at Guidewell Financial Solutions. Always a pleasure to have you here. Thank you so much for all the information today.
Thank you, Jeff.